Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com, coming to you from a hotel room in North Carolina. Last day I'm here, I'll be traveling back to the Tampa office in no time at all. So, listen, wanted to get you guys the information for the day. There are tons of earnings hitting the wires. This means trading opportunities based on technical analysis. All right, so without further delay, let's jump into the chart here. This is the QQQ pre-market, essentially the NASDAQ 100. Let's see what is going on here. You can see that basically we are net positive, right? So we closed yesterday right over here. And after hours, there was a whole bunch of chop. This morning at 4 in the morning, you had a nice push up, and then it's been sideways chop ever since. So again, looks to me like we are setting up for a positive move on the NASDAQ as well as the S&P 500. Now, part of this is basically the 10-year yield. In fact, I would argue that a majority of this, maybe not all, because generally earnings have been okay, but if we look at the daily 10-year yield, the 10-year yield is down. And what do we know about the markets, guys? Again, this is classic understanding of how rates impact the S&P and the NASDAQ. What we know is that when rates come down right now, the market tends to float up. The market wants cheap money as long as the U.S. economy is strong, right? So cheap money means free, at closer to free. The stock market, investors, we've been addicted to cheap money for a long, long time. Cheaper money means more money to borrow to go into the stock market, and that's the relationship right there. All right. So again, now we are seeing one thing to take note of, and I gave you guys this yesterday in the game plan. We have a very important trend line right here that we are now kissing. So what this could mean is, and this is going to be pivotal going into Friday and next week, does this line break, or do we get the technical support to trigger a bounce? If yields bounce, then you would have to assume inflation could be hotter than expected in the PCE data tomorrow. That's going to come out in the pre-market. And maybe that, again, then triggers a sell-off as higher rates generally would. All right. In addition, looking at the U.S. dollar real quick, the U.S. dollar's down ticking just a little bit. This is helping gold catch a bid this morning, which is nearing its all-time highs. We'll go over that chart in just a minute. But let's get into a lot of these earnings. Yesterday after the bell, Microsoft reporting earnings. This was the daily Microsoft chart going into earnings. This chart, to me, what does this show us? This is a flagpole and a flag, right? Sideways inside bar consolidation. So if you know your technical analysis, very simply, this is a sharp down move with a lot of sideways to slightly up chop. That should be bearish, right? Let's see what happened on earnings. And yes, earnings triggering a sell-off. And the stock right now on Microsoft trading at around 421 after closing at around 442 yesterday at the close. So again, this is about a 4% move down. It's not a huge move, but for Microsoft, this is a solid one there. And again, if we're looking at tradable levels, I'll show you guys my first and only level right here. Well, it's not the only level, but this is the first one I will be watching, 415.67. There's a gap fill right there. And if it breaks there, your next level is at 410.85. All right, so these are the two levels I will be monitoring during market hours in the Apex Live day trading room with members to potentially look to trade. All right, so keep that on your radar. Next up, what do we have? We have Tesla. Tesla, again, coming into earnings. Wasn't down to my target yet, but also a lot of just sideways chop. Tesla getting a bounce in the pre-market off of earnings. You can see initially it flushed yesterday after hours, then recovered. Now, this is an interesting one, guys, right? So check this out. So basically, they missed on earnings. Their numbers were not that great, but Elon Musk said they're going to start growing again in 2025. So far be it from me to say, hey, that if I was a CEO, I'd probably say the same things. Yeah, we're going to grow. We're going to do great in this year. Yeah, last year kind of stunk, but hey, it's going to be a great year coming up. Either way, the markets believe it. That's really all that matters, right? That's really all that matters. And so again, here we have a trending up move on Tesla. In terms of a trading level, there's not much here because we're trading at 406 right now, 406 to 407. If we look at that on this chart, that's right here. It's not even that high, right? All you're doing is going back to where you were basically trading last Friday. And so again, for me to want to trade something, I want to look at a big move that is kind of outside of the norm. And really anything in this range here, right? Anything in this sideways chop, that's all within the norm. If we had flushed down to this 360 level, okay, that's outside of the norm into this technical level. If we had surged up maybe to double top at 439, 440, okay, you're at the high end. That's a short-term double top. But anything in this range is just honestly of no use whatsoever as a day trader. And again, I'm just speaking about myself as a day trader. All right, here's your chart of Meta. Meta was rising up into earnings. I had put this out for members here. This was my key resistance zone, anywhere between 714 and 720. Look at this trend line here, this pivot low to pivot high to high, and that scopes up. And then you have the parallel, right? Perfect parallel line. And those two merged up there. If we go to the pre-market action here in the after hours from yesterday, I got to show you this because I'm proud of it and it shows the technicals work, right? So what we have right here is a rally to the upside after an initial drop on Meta. Where does it go? It goes right in between those two lines. Remember, those are the same two lines we just looked at right here that were right up in this range. All right, amazing to see that. What does Meta do? It gets rejected off that and is now chopping sideways. So Meta is still green in the pre-market here, not up by a lot. We're talking about 1 to 2% type of move. I think again they missed on revenue from what I saw. When you have a stock that has rallied up this much going into earnings, and if we go to the weekly chart, look at the rise on this weekly chart. This is a chart or a stock that needs to blow away on all metrics. So it is getting a little bid. I would not be surprised if this fades today at some point, maybe closes flat or slightly negative, just because, again, not only has it been on a long bull run and is really priced to perfection, but also just recently, right? It was just trading at 595, and 2 weeks later, here we are trading at 695. We're up $100. That's about 20, little under 20%. Okay, so those were the key movers yesterday after hours. We have more to go, but wait, there's more. What do we have? We got to look at UPS. UPS getting slaughtered this morning on earnings. Look at this drop, guys. Again, the stock yesterday closing around 134. It's trading just around 114. I do have a couple levels that I will be watching to trade today. So let's zoom out. These are a couple levels right here. In fact, this is my zone. Basically 111 down to 108. Notice you have a gap fill over here. That's going to work as technical support. And look at this down sloping, connecting low to low to low. These merge right here. So right now we're at 114. If this thing were to sell off, get down in that lower range, I would be considering a long opportunity on UPS. All right, even more. Let's go to some of these other big names. Caterpillar reported this morning. Caterpillar had just come off a serious bounce to the upside here. Again, this was on the back of potential good news for the economy and so on and so forth there. And what we see here on a pre-market basis, if my chart would come up, which it doesn't want to, is Caterpillar is down. So again, Caterpillar is down pre-market here. We'll go on to another chart and I'll come back to this one. WHR, let's take a look at WHR here. And again, bear with me as my charts seem to be going in and out. Probably the hotel internet. What can you do? But again, Whirlpool is getting hammered here this morning. All right. We're talking about Whirlpool down over 10%. The kicker here is that Whirlpool, folks, is in a scenario where it is a consumer stock. And this is one I'm very closely paying attention to as we go through here, because Whirlpool itself, what do they sell? They sell big appliances, dishwashers, washing machines, dryers, etc. And not only are we seeing a slowdown in the housing market, which is probably influencing big purchases like this, but it's also people that are upgrading and they're not upgrading as quickly. And that is a concern there as well. All right. So again, these type of things are in play and we have to keep an eye on them as we continue through. So big moves here, another level here, and I'm just reading off my notes here. Levi's a jean maker. That stock is under pressure as well this morning. And again, having major issues to the downside there. Comcast is lower as well. So there's a lot of stocks. I even saw Tractor Supply, which is another consumer name that is to the downside. All right. So all of these type of levels here are seeing some pressure to the downside. And again, for some reason, my charts on TradingView just not wanting to update this fine morning. Okay, so we'll keep an eye on that and just see how it goes here. And if they come back here, I can get you guys right back into these charts. But listen, suffice it to say here, if we take a look here, let me see, do I have them back? Yep. All right. We got them back. Beautiful. All right. Here's Whirlpool. You can see Whirlpool's big drop to the downside. That's trading at 113, flipping over to the daily chart. I've already annotated my levels off. Big drop down. 106.25 is a major gap fill. And then the double bottom gap fill down here at 99. I would love the 99.30 level. I just don't know if we'll see that today, but that would be a big one there. Okay, quickly going back to Caterpillar here. Caterpillar, if we look at this, big drop there, as I had just mentioned, and that one again getting a small bounce off the lows pre-market. But let's look for trading levels. Here they are. We have our first one. This is a high risk level at around 367.50, and then ultimately major gap fill at 362 and secondary major double bottom at 351. This again would be the first one to 367. We almost got there pre-market. If we look here, we got to 370. That would be a higher aggressive level, but nonetheless a level to keep an eye on. Now, again, just to repeat what's going on here, folks, you have a scenario where more and more of these consumer stocks are showing signs of weakness. And that is something that I'm picking up on and kind of extrapolating out and saying, okay, we haven't seen the jobs data come out weak yet. And we'll get that next week, by the way. We've seen inflation upticking a little bit. The stock market's still staying around all-time highs. But are we seeing the mid-level consumer starting to struggle here? All right. And again, why do I bring that up? Well, the low end consumer is already getting crushed, right? You have Dollar General. I mean, Dollar General, Dollar Tree, all of these stocks have just been getting annihilated. If I bring up my charts again and we just take a look here, if we look at this, right? This is Dollar General. Look at this chart on Dollar General. It's been crushed, right? Because the low end, the low income consumer has been absolutely annihilated. We know from McDonald's has said that people that make under 50K can't even afford to go to McDonald's anymore. So that they've been struggling for a year. The question is, is it starting to bleed up into these mid-level ranges, like, you know, being able to buy a washing machine or something, or these kind of, and again, those are generally big purchases, obviously, but still it's something that someone might have to upgrade their old one to. Are they starting to see struggling? Levi's jeans, right? Those type of things. Are those starting to see some issues? So I think this is something to watch. I don't think the high-end consumer is hurting yet. So those people buying Rolexes, those people buying those type of things, there's still a lot of demand from the wealth effect of the stock market with people with major investments. But again, these are things that I'm paying very, very close attention to. Just quickly going to Comcast CMCSA here. Let's take a look at that one. And if we bring that up on the charts, if it does come up here, I'll get you guys that chart. Yep, there it is. Beautiful. Look at this drop on Comcast. Wow. That's a big drop here in the pre-market for Comcast. So Comcast initially opening higher pre-market and then coming down on earnings. And if we flip over to our daily chart on Comcast, first technical level, you got to go quite a bit lower. There's a gap fill around 31.30 right down here. 31.30. Let's draw a trend line there. That would be first, and then double bottom here at 28.50. Those would be your two key, at least the ones I have, the two key technical support levels. Okay, so again, these are different levels for opportunities. I just want you guys to be ready. Volatility is here to stay. We obviously had a wild Monday. Things have quieted down just a little bit. If we flip back to the spiders and the S&P and go to the pre-market, you can see a little bit of chop here, but generally slightly higher on the day. But let's flip over to Bitcoin and gold and silver and take a look at what we have here. All right, so the pivot line on Bitcoin right here. Guys, see this? And again, let's get over to this. I want to show you guys this. So right here, this trend line, look at how price hit it yesterday, rejected. Hit it today, so far it's rejected. This is a major level to watch because, again, this is like being on one side of the mountain or the other. If you're on this side of the mountain, the water runs down and you favor that move down. If it's on this side, the water runs in this direction, right? Up into this level. But this is that pivot line that I continue to watch on Bitcoin to give me a sense of which angle has the higher probability of playing out. As of now, it's still favoring the downside, but again, a daily close above would then favor upside to 108 to 111,000. Gold today, good move on gold this morning, nearing the all-time high double top. We had a little kiss here and a pullback, and now pushing back to the upside. Gold miners are doing really, really well today as well. Again, this level now will still be resistance at 27.90, but because it kissed a few days ago, it is no longer as heavy resistance. And remember, folks, I always try to explain this to you, and I know we have new people tuning in every single day, but basically, a level works the same way as a door that's locked. So if you have a great major level at double top and you're coming up into it the first time, it's the same thing as ramming into that door, right? So the idea is you're ramming into that door. Most of us on the first hit of that door, you're not going to break it down. The idea is every time you ram it, it's going to weaken until eventually, if you keep ramming it, the door is going to break down. That's exactly how trend lines work, support and resistance. And so the idea is a trend line that's hit many, many times is going to be much, much weaker. And eventually you have to go on the assumption that it very likely could break. And that, again, is something we're looking at on gold. Now, listen, this is technically only the third hit. So this would be first hit, second hit, third hit. So it may not break here. It's still a decent level. But if it hits it and pulls back and then tries again, it very likely will break up. And that continues to go in the mode of expecting gold to do very, very well. All right. Let's take a look at silver today. Now, silver, you guys know, as of yesterday, I was looking more and more bullish on this chart. We talked about it in that bullish bias, and look at that move starting to percolate here and move up. Short-term resistance on silver is going to be right up here at around 32 and a quarter. That would be your first big test of price should it get into that level. All right, next up, let's look at oil real quick. And if we look at crude oil this morning, oil is slightly lower, getting closer and closer to second target right down here. And again, that's around that $71.35 level right there, $71.35. That'll be second target. At some point, oil's going to bounce here, right? Whether it hits this level or kisses this level, it's getting short-term oversold, just like going up, right? So just like going up here, it was short-term overbought. It favored a pullback. We got the pullback via the trade on SCO. And now it's getting to that level where you got to expect a bounce at some point. Whether it touches this line or bounces before, we'll see. But again, a bounce, but then I do think eventually it rolls over and goes even lower. Let's look at natural gas real quick here. Nat gas slightly lower. Remember, it finally broke down from this upsloping parallel right here. And again, it did so with a river theory, using river theory there to explain it. Moved down, it confirmed, small bounce, and still showing weakness today. All right, so lots of things going on here. We did get, by the way, GDP numbers this morning. So GDP did come out. It was announced this morning, slightly weaker than expected, but not enough to really raise major alarm bells yet. But again, you start to put the pieces of the puzzle together. Whirlpool, Levi Jeans, some of these other players out there, and you're starting to see a little weakness, like I said earlier, creeping into, it seems like, the mid-level consumer. So it used to be, and just to reiterate this is so important, it used to be just the low-end consumer, the low-income consumer. Now it looks like it's starting to spread like a virus to the middle side of things. And again, ultimately, the idea is if the stock market stops making new all-time highs and actually starts to have a pullback, eventually it would probably spread to the high-end consumer. Okay, guys? So this is where we are. I've got my trading levels ready for the Apex Live Day Trading Room. This is, again, where I love to be with you guys. Before I get going, I want to show you guys one thing real quick here. I want to flip over to the website and just go over what we have here on the website, right? So if we go to the top of this, and there's so much free data on this, right? So again, just to make everyone aware, you have your advanced trader insights. I give 3 trades every weekend as a trade. There's a trade of the day done by my head trader, Ben. There's reports on Forex, on options, on all these other things in here. $20 a month. Just be aware of that, guys. It's basically the low-hanging fruit. If you want to get some great exposure, some great insights, some premium stuff, that's where you go. And then, of course, folks, if we scroll down, just look at all the free stuff we have on the website, all our articles. And by the way, if you go to most websites, this stuff is written by journalists, right? For us, we're all traders, right? And we're writing this. So when we're writing it, we're giving it in terms of the levels, right? So if we click on my Whirlpool article here, I give out literally the trading levels, and I just discussed them with you guys here, and give a write-up about what's going to happen. And I think that's what really makes us unique here is at Verified Investing. We're not about like, oh, we're journalists, we're just reporting this and that. We're actually analyzing, and we're doing it from a technical, data-driven perspective. You can see here's the U.S. debt, which just keeps ballooning. We have that up here. Insider buying. By the way, you guys see this? Notice how there's almost no insider buying and selling. This is because once you get close to earnings period, it goes into what's called a quiet period where insiders are not allowed to sell if their earnings are reported, I think it might be within 30 days or 2 weeks, something like that. I don't know what the is, but that's why it died out here so much is because we're in earnings season, and insiders are not allowed to sell when they're just about to report earnings, because obviously that's about as shady as you can be, right? If you sell like a ton of stock just before you report bad earnings, they're not allowed to do that. So that's why you get into these very quiet periods on insider buying and selling, is because they're not allowed to. Scrolling down, guys, these charts are updated every week by me, writing about the key levels, Bitcoin and Ethereum, the technical levels, S&P, etc. We have amazing stats here that I post and my team posts, economic charts, write-ups. The earnings calendar is fantastic, guys. You ever want to know what earnings are coming out, the big ones? I didn't even go over Wolf Speed today just because last I checked, it wasn't doing a whole lot. But they reported earnings yesterday after the bell. I still like the chart. The stock looks like it's trading slightly positive pre-market. Great chart, but again, just going to need some time to percolate on that one. And then as we scroll down, folks, more and more information here. Just great stuff. Heat maps, Fed watch tool, fear and greed for crypto as well as for stocks and beyond, and even more great articles down here. So just, again, the idea here, folks, is that it's all about giving the data. It's data driven. And I want you guys to really understand that when you shut out the emotion and you take out the emotion and you start looking at data, it really does play a role in performance. And performance be getting on a level that the institutions are on. That's what we all have to strive to do, to become like them. They're not making emotional decisions in general, making database decisions. And if we do that, the theory is we should perform very well. And I think you guys see from the levels that I draw, the analysis that I give, is that I certainly am not perfect. I have my fair share of bad calls, but so does every institution. The question is, do me and them, do we have many more good ones than bad? And the answer is yes, because we're looking and responsive to data. All right. On that note, guys, last again video here. I'll be back in the office tomorrow. Thank you guys for hanging with me while I was away here. I love you all. Appreciate you all. Thank you so much. Take care.